And just like that, a third of our market is gone. From 30,000 down to nearly 20,000. Alrighty, so we are looking at booking here. We made a trade on booking before. This is an incredible trade. This is going to be the 1300 1295 put spread for the March 20th Expo. They are closing everything. So these stocks are going to be hit so hard when this comes on the news. They canceled MLB, the preseason or whatever they got going on. They canceled soccer. They canceled the Big 10, the Big 12, the Big 15, whatever they are out there. They canceled everything. So once that comes on the news tonight, I expect Booking Travel Company to continue to drop lower. Now, if we zoom out a little bit here, I'm going to be looking at a target on Booking of about $1,000. So I think Booking is going to drop another 300 points until we get down to this support, going all the way back to 2014, 2015, 2016. So once that news comes out, I think there's going to be even a more massive sell-off here in Booking ahead here. So like I said, I got the 1300 1295 put spread on Booking, and I'm thinking about doing another trade on it now as it continues to drop here. And if you take a look at the today 1 minute chart, as you can see, we got many trade signals per our trade plan today that we could have taken advantage of had we wanted to do some day trading here. I'm reading news about the coronavirus. What's this? Coronavirus and weed. Are smokers and vapors facing greater risks? So many great articles that come out on there. Love reading them. A lot of trading halted. Look at the drop on the Diamond ETF here, though. From nearly 30,000 all the way down to nearly 20,000. Booking still continuing lower here. So we're at 1,300 now. That's been the support of the day just about. If we zoom out a little bit here, you can see right going into 9:30 this morning, we had a little bit further of a dip down about 1295. So if we could break that support of the day here on Booking, if we could break below that 1295, I'm going to be getting my option chain right here, and I'm going to be going like this. BKNG. Now, if you take a look, many people ask me, what's the difference between a put and a put spread? And when do you want to go with one over the other? Well, first things first, when the IV is considerably higher like it is now, you're going to pay right here. This is $101, 101.20 for this contract for the 1300 strike. That means that one single contract is going to cost you about $10,000. Now, one contract is going to give you control over 100 shares, so it's still much cheaper than buying 100 shares of Booking. But, then you have to understand, you need it at 1,300 minus what you paid for it to break even. So if you paid 101 for it, let's say, right, 1,300 minus 101, your break even's at $1,199. Now, for 100% return, you needed 101 points lower. So at 1,098, that's where that option right there is going to make a 100% return. So now keep that in mind, because what I want to tell you, what's the difference now? Well, for 100% return just buying this put, you need the stock to drop to $1,098 to make that 100% return on expiration day. Now, what if I told you there's a way it could stay right at 1,300 and you'd still make 100% return? Because with a spread, that's what we could do. So if we bought the put here, and let's say we wanted to do the March 20th monthly expo, that 1,300, like we said, the last traded at $92. So there's 100 shares in a contract. Right here you can see standard options, 100 shares per contract. So you have to multiply this by 100. So if it last traded at 96.37, multiply that by 100, that means that one contract is going to cost you $9,637. Well, there's two problems we have with going with the put here. Number one, it's way too expensive for most retail traders or most people to afford. Number two is you need a big move. You need it to drop down to $1,098 to make 100% return. Now watch this. With the spread, buy to open, sell to open, put March 20th Expo, March 20th Expo. Let's say we did the 305, 300, 1300 put spread. You could get this filled for about, let's say, $2.50, maybe $2.60. Excuse me. So with this spread, you're going to make the max gain and it would be like this. So it would be net debit. And so the difference between the two strikes right here is $5. From 1300 to 1305, that's $5. That means the most this trade could be worth is $5. So if you want 100% return, that means you don't want to pay more than 2.5, right? So if we could pick this up for 2.5, and you know what? This is a great, I like this. We could make a small trade on it now just to show, and watch, you could do 2 contracts. I already have, let's see, 25. I have 35 contracts right now, but I'm going to make this trade to show you guys because I love this trade. So if you wanted to do the 13, see, I'm short the, or I'm long the 1300s. So it's not going to let me sell to open this because I bought to open the 1300. So I'm going to have to change the price here a little bit, the strikes. So let's say we wanted to do the, let's change it to this one, the 1295 to 1290. Now the difference here is $5. The most you'd want to pay for it for 100% return is $250. But since this is below this current stock price, 1302.2, we want to pay less than $250. So let's say we could get this for let's try 1.75. If it could be worth 5, what's the max gain on that? 5, divide that by 1.75. You have a max return on this trade of 187.71%. So let's see if we could get filled for $1.75. So we'd go net debit. We're buying to open the March 20th, 1295 strike put, and we're selling to open the 1290 March 20th put. Now, what does this mean? This simply means we're buying the 1290. So let's just say you're buying a room for, right here, buying a room for 1295. You're giving someone the right to sell it, or you're giving someone the right to buy it off of you for 1290. And puts, you make money as it goes down, you know, so that's what you're looking at there. If it's a call side, you know, simply look, a lot of people have problems with calls and puts. So think of it like this. So if you have the 1295 and the 1300 strike call spread, this simply means you're buying this for 1295 and you're selling it to someone for 1300. So you're making a $5 profit there. Now, someone's not going to want this stock if it's below 1300, because why would they pay 1300 for it if they could get it at 1297? So the downside to you having the spread, you're capped at a max gain here. Let's say the stock increased 20% and it got to 1500. Well, these are obviously going to be worth $205 more than the $5 you would have sold them for with the spread. So you're missing out on that gain, but you're also capped and your risk is identified right there. So the max you could lose on this is the $1.75 if you're putting that in for. We're getting 2 contracts, 175, 175, that's $350. So this trade's only going to cost us $350 if this gets executed. Let's see if it gets executed. Oh, we got the calls here. Let's change this to the puts. What did we say? We're going to do the 1295, 1290. And look at the chart in the background here as well. As you can see, bookings in BDM, it got up to the 20 SMA. It's failing. It's breaking through the 10 SMA right now. And you can see from before when we had the cross from all the way, I think we got up to 1375. Yeah, we got up to around 1370 earlier. She's in BDM now. And like I said, she has some support at 1300. If it could break below that, but she's starting to drop now, so we want to get in this order. So we're buying to open the March 20th 1295 strike put, and we're selling to open the March 20th 1290 strike put. Max gain on this, max it could be worth is $5. And to be worth $5, it needs to be below 1290. It's down 141 points today, down 9.79%. So a 10-point drop there, $10 drop, that's nothing. So let's see if we could get it for $1.75. Like I said, that'll be a $350 trade. I think I already have about 6,000 on this. So let's see here. Okay, we already have the 12.95. Okay, so we have to change this because, like I said, let me show you guys why I can't do this. So here's the trades I have right now on booking. So I have the 1255, 1250 put spread for the March 20th Expo. So on this trade right here, I need the stock below 1250 to make max gain. Okay, the one below that, I need below 1295. Okay, so I can't be short and long a strike at the same time for the same expo. So we're just going to have to change strikes here. We could change it from, let's say, 1285 to 1280. Now, the midpoint on this is saying 780, but you already know that that's wrong coming from there because the max it could be worth, max you could sell it for is $5. So you can't have a midpoint of 7.5 if the max it could be worth this is $5. So like I said, the difference here is 5. Let's put in an order for $1.50, see if that gets filled. And so that'd be a $300 trade, buying to open 2 contracts of the booking BKNG, March 20th, 1285 strike put, selling to open 2 contracts of the booking BKNG, March 20th, 1280 strike puts at a net debit price of $1.50. So this is going to be a $300 trade with commission being $2. Place trade. And that's here. It's showing on the order status as live. So it hasn't executed. So then if you wanted to go around, that's why I always say when you have such big spreads between the bid and the ask, start small and work your way up. Don't immediately put in an order at the midpoint because they're totally off. You can't rely on a system like E-Trade Pro here. So just rely on starting low and going higher. So let's try it for $1.60, see if it fills. It might not fill up till $1.80 or even higher. So this would change it to a $322 trade. You can see it's live in the background here. Still not filling. We could change that. Let's try $1.75 here. So $1.75 to be worth 5. That's live. Still not executing that. We could go here, change that. Most I'd put it up to is $2. If you put it up to 2 and it could be worth 5, that's a max gain of 150% return. So let's submit this. It's going to now be a $400 trade. That's still live, still hasn't executed. So I don't feel too much more comfortable putting anything in lower than that, or higher than that, I should say.
FFIN, First Financial Bank shares announcing renewal of stock purchase plan.
Let me see what you guys are saying here in the trade room. I must have been streaming this on the wrong place. It should only be on the website right now. Yeah, I see here. I have it streaming everywhere else. Let me end this on some of the other pages here. It's only going to be live on the website now. So if you guys want to come join us, go to breakingchartalerts.com and you could join us on these videos.